What are stocks and shares? We're going to be going over that in today's video. Stocks and shares are the same thing. They're the same thing. That is a token issued by a company that once you purchase it, entitles you to a share of that company's profits. Think of it a lot like Kickstarter. When you pay $20 into a Kickstarter, they give you, say, a t-shirt. But when you pay $30, they might give you a hat. Well, when it comes to investing in stocks, the companies are doing the same thing. They still want money off you, but the offer is always going to be the same. And that offer is the more tokens you own, the more of a share in our profits you get to enjoy. So why do some people call them stocks, but other people call them shares? So this is a perspective thing. Companies tend to call them stocks because they view it as like a product that they're selling to you in exchange for your money. Consumers tend to call them shares because, as we stated before, when you buy one of these tokens, it entitles you to a share in that company's profits. When a company pays you for the stocks that you own with them, this is what we call them making a dividend payment. If you were investing in stocks specifically to get access to a share of the company's profits, this is what's known as dividend investing. Now, there are other types of ways to invest. A lot of you may have heard of the term day trading. Day trading involves going long on stocks, and it also involves going short on stocks. When you go long on a stock, you are basically buying the stock at a certain price, waiting for the value to go up, and then as soon as the value goes up, you sell it for an immediate profit. Short selling is a little different, and it's a little bit more riskier. When you short sell, you are borrowing the stock on a particular date and selling it for whatever price it's at on that day. The catch here is you are obligated to buy that stock back at a later date. Now, when that later date comes around, if the stock has decreased in price, that's great. That means that you made a profit on the day that you borrowed it. But it can go the other way as well. So if that date comes around where you have to buy the stock and the stock has actually went up in price, well, this could be bad for you because it does mean that you're out of pocket. Another way of investing in stocks comes in investing in funds. Now, you can think of funds like an individual stock that is made up of several other stocks. Now, the overall price of a fund is determined by the performance of the stocks that are within that fund. So if some of these stocks are underperforming and are at risk of dropping the price of the overall fund, well, we can just sort of get rid of those stocks and replace them with stocks that actually are performing. In this way, funds tend to try and keep their prices pretty consistent, and they do try to grow them over time. This makes them much safer investments than, say, something like short selling. There are 3 different types of funds. There are mutual funds, index funds, and exchange traded funds. There are probably more out there, to be honest, but these are the 3 main types that we've come across in our research. Mutual funds have professional stock pickers doing all of the sorting, so finding the stocks that are performing and keeping them, finding stocks that aren't performing and kicking them out for the ones that are performing. Because of the fact that there's a human element here, mutual funds tend to charge higher fees. Index funds do all of their sorting through complex machines and algorithms. Now, because they don't have a human element, they tend to not charge their fees as high as, say, a mutual fund would. Exchange traded funds can be either a mutual fund or they can be an index fund. The key characteristic of an exchange traded fund is that you can trade them on the stock market like you would a normal individual stock. You can't always do that with like mutual funds and index funds. If you're interested in learning a little bit more about the risky world that is short selling, you can check out our video here. Otherwise, thank you guys so much for watching. Certainly hope you got something from it, and I'll catch you all next time.